Welcome to this week's Nebraska Soybean Board Weekly Market Roundup. It's being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We've got a lot that we're going to be looking at today, including this WASDE report of earlier this week. We know the cash cattle went down a little bit, but are we looking at some macros and showing some maybe slaughter giant numbers? Or are we being able to keep up with what the demand is, knowing consumers are looking at their pocketbooks when they head to the grocery store? We're also going to talk about what's going on politically in the world, and of course, also taking a look at maybe some demand out there from a grain perspective globally.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines, and it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Now, joining me on the screen today, you will see two gentlemen, Brad Kooima with Kooima and Varlick out of Sioux Center, Iowa, and Sam Hudson with Corn Belt Marketing. And real quick, gentlemen, I got to give a big shout out to the United Soybean Board. Thank you to them for the awesome soybean picture that we are using for our background for this week's program. So thanks, USB. So let's start out looking at this trade. Sam, I want to get your thoughts. WASDE report, did you see any surprises in those numbers?
Well, you can't have a surprise if you don't change any of them. So, with things being completely unchanged for corn and soybeans, really nothing to look at here. The USDA is going to wrap it all up in their final, January numbers when they can get crop production updates alongside it. And in the meantime, we're going to see what South American does.
Oh, we have had a problem with Sam freezing up. So, Brad, until he gets back here with
markets, I think we go a little bit quiet, low volume.
Go ahead, Sam.
No, sorry.
That's okay.
Yeah, as we get closer to Christmas, low volume, not a lot to talk about. So I think the headlines are going to drive things, money flow, those weather forecasts and how they evolve. And of course, any conflict we see in Ukraine, I think that's kind of a sidebar conversation as well.
All right, we're going to come back around to what's going on in the Ukraine. Brad, your thoughts? I mean, I know that this report isn't as big as what we're going to see next month.
No, it certainly is not. And I was kind of relieved that, typically the December report doesn't have a lot of fanfare to it. And this certainly, I agree with Sam, certainly did not. I think everyone's wondering about, the old adage, you can tell I'm the old guy in the room again, but, big crops get bigger. Are we going to find that out here in the January report? Certainly the last couple of years, there's been some surprising numbers that came out on those reports. So my sense would be that whether or not the USDA will catch up to the kind of corn demand that we've seen, I'm interested to see that. And then I'm anxious to see what they're going to come up with final numbers, particularly on the soybean crop.
Well, we look at this, Sam, there's been a lot of discussion about what's been happening with Russia, for example, and this export tax that they're putting in. Could that mean some good news maybe for our wheat producers here in the States?
Well, it could. I think that's the key question here is they're really dictating what demand is going to get filled by the U.S. instead of them. Keep in mind, we have stocks to usage here domestically still almost 30%. So we're not running out anytime soon here. With corn and bean prices pretty high, you're still going to have a battle for acres going into next year too. So this is really just figuring out what we're going to be seeing moving on the forward curve as opposed to what we're necessarily seeing on a week-to-week basis when prices rallied here to was it 9-year highs just of late. We kind of took ourselves back out of the export market with the recent break that we've seen of about $1 a bushel. Hopefully we'll bring ourselves right back into it.
Are we seeing now, the fact that you're out in Illinois, what are you hearing on numbers when it comes to the soybeans and crush? I understand that Illinois has had some decent as of late.
Yeah, absolutely. I mean, domestic usage for corn and soybeans is good on the processor side of things. Margins are there, and I think that market's January and beyond. So we've seen river basis levels pretty strong too. We finally put a little bit of carry in the bean market out to January. We've seen barge freight rise pretty sharply here over the last week and a half, partly due to the fact that there's a big demand for empties to come back upstream to fill that demand, and also due in part to low water levels. So hopefully we can fix that too here with some precipitation coming through.
A lot of things that we need to take a look at. Of course, big shout out again to the Nebraska soybean farmers and their checkoff who brings us this weekly market roundup. And Brad, we can't have a livestock trade without the grain trade, but livestock, what are your thoughts on this last week and maybe a little bit of a backstep we did with the cash cattle market?
And a surprise. And I think if we would have done this little show here on Monday morning, I would have said I thought that cash cattle were going to be steady higher. And I think that's what most of the people thought as well, as reflected in why the futures market broke when that indeed didn't transpire. The North was generally steady. The backyard that I'm in, Northwest Iowa, traded cattle largely at 140 to 141. Last week, the South was 142. And I think the feeling was that they would do that again at least. We didn't. The crease in the armor started a little bit yesterday when they started to let some cattle go at 140, and then even a few cattle at 39, and then a few cattle have traded as low as 138, mostly in Nebraska. You've got a very weak basis, okay? Yeah, you've got a very big incentive if you're a hedger with December trading under cash like it is to go ahead and take advantage of that basis. I think you also have the market. I mean, so 6 weeks ago, I got 121 to give you some perspective. Mm-hmm. All right. So if you're a cattle feeder, which I am, you're kind of going like, well, geez, the first time it was at 139, I was delighted. Right. So why should I be so disappointed now? And the cattle work. Okay. They make a little money, which has been an exceptional deal this year. And so there's some, I think a little more ease, in the trade. So we had also a little bit of break in the boxes, which, isn't unusual this time of year as well. And so I think that thing both contribute to the pullback that we had on the cattle. But still holding up trend lines, still holding retracement levels, still a market that I think has got some life to it.
Is demand, this burst in cattle demand from a perspective that we're at holiday time, can that help this market out?
Demand is interesting. The older I get, the more that's, I think, what I enjoy about the cattle thing. Maybe, I don't know what, Sam, great number cruncher. You look at corn and beans, it's a storable commodity, right? And this is what it's worth. This is what it's worth to a crusher, whatever. Beef, on the other hand, is a perishable item, and we don't throw it away. Okay. And so demand is a kind of a function of how much can you sell at how high a price, in my opinion. Last 8, 9, 10 weeks of slaughter have been huge. The last 3 weeks in particular. Record slaughter last week for our 2.5-year highs last week. So we're getting cattle dead at an incredible pace, which is awesome, because now we used to, a year ago, you and I would talk about, so-and-so is only killing at about 65% efficiency, blah,
right.
blah, blah. So demand, obviously, for this stuff is, generally speaking, exceptional, right? What happened here this last week or so, I think that the middleman got caught really trying to gouge what they thought they could charge this rib meat, or that high price, that tenderloin, the ribeye, that stuff, because that's had a severe break this week. Too bad. You got caught. Now, they'll flush it out. Like I said, it's a perishable commodity, and that's what the break was this week. So I really think the little setback in demand domestically is temporary. But, generally speaking, we enjoy great global demand, and I think people are ready to get out of their house and go eat a steak, right?
That works for me, Sam. I see you kind of shaking your head in agreement there. What are your thoughts?
Yeah, and how he finished up there too is how I'll start on the export side of things. We've continued to see things run ahead of pace there too. So not a lot to be negative about in the short term, aside from the fact that we probably got the numbers around to meet that demand. If there's concern that I have, would be probably after that February 1st timeframe. Once we get beyond all this, once again, what do those grocery bills look like? Do you start to see a leveling off in some of that demand, or do we see some of that this enthusiasm that he's referring to carry over into the spring or summer of next year?
All right, we've got that holiday feel already to the mode, Sam. I understand not a lot of contracts traded on a Friday. Are guys already starting to check out and think about the Christmas and New Year's?
Well, I would say so, especially without anything that USDA data. I think you're going to be kind of led around just in your intraday moves. Some of the algorithms will be trading these markets. And like I said, any sort of headline that gets dumped into there could certainly create an impact. Obviously, the biggest factor long-term, big picture, is still going to be the South American weather, because it's going to dictate and force the hand on whatever our export shipments are going to look like here moving forward. And that the shipment side of things becomes more and more important moving forward compared to the sales itself, because an unshipped sale doesn't really mean anything.
So political challenges, Brad, is this more from a grain perspective than a livestock, or are you going to see livestock have some struggles with it too?
Well, I guess we have to talk about, you and I kid about we shouldn't trade anything that eats whatever, you know what I mean? Let's talk about the pork, right? Okay. Certainly, there's if we have something that really causes a dysfunction in the market. Of course, beef is always in the front row, but clearly this break on the hogs that we had here a few days ago was tied to some diplomatic posturing about boycotting the Olympics at China, right? So the fear right away is that, oh no, we're going to put at risk our trade relationship with China. There's two big things when you're talking about China. I don't know if Sam agrees, but it's beans and hogs, right? And to a certain degree, corn as well. But the hogs have done more than recover their losses here this week. And so to me, the market is putting that back, and it's back in the rearview mirror. But yeah, it frustrates me to no end, because particularly in the pork, if someone's bearish and he's ran out of good ideas of trying to talk his story, you can always bring up China, right? I mean, because they're about as disingenuous a trade partners we've ever had. So why not? You can kind of go with whatever you want to there. My tendency, though, is to think that we are the one reliable supplier of pork for there. And at some point, I think they're likely posturing to see what this administration's will is in terms of trade will. And don't forget, the last administration, we had some struggles with the marketplace during that period, right? So I don't know, other than I got to roll with the punches, but I got to think that we're still going to be a great trade partner for them.
All right, real quick, Sam, what do you think? Beans going to continue to struggle politically?
I think that we're going to be range bound. I don't think there's enough to fodder right now to take it, one way or the other. When you look at the crush, we've got margins there. I think the only thing to take a look at here this week is after this EPA announcement, we've seen soy oil struggle a little bit, on the heels of that. So as long as that stuff all looks good, I think we're going to keep that strong usage on the spot market. That's not going to change.
Thanks so much to the Nebraska Soybean Board and the soybean farmers and their checkoff as we focus on this week's Nebraska Soybean Board Weekly Market Roundup. As always, commodity futures and options involve a substantial risk of loss. They're not suitable to all investors. Have a great weekend. I'm Susan Littlefield.